JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 16th of June 2020, so yep, welcome everyone. Welcome to this Tuesday's morning live session where we're going to have a quick look at the markets, a few of the charts, a few technical setups as always. Yep guys, but before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Quick update on what's happening here globally. So yep, the figure has surpassed the 8 million number, which, well, it was likely very very expected, but to be honest, I mean, of course, it seems that the figure for now will continue rising, as you can see here. Yes, we keep on moving up and down, but with the trajectory to the upside. So that's why, unfortunately, this is a bit of a sad moment here. However, hopefully at some point, maybe this year, maybe this can stabilize again. So and we can see a down move here, a downtrend. However, for now, it's still within an uptrend. The total the daily cases of infections. Now then, jumping into a few charts now. Here the indices, the market sentiment got a boost yesterday. Investors getting back to risk on trading, and of course this kind of the fact that it was mainly driven by the Federal Reserve, who started its bond purchases again. So basically, the whole corona issue kind of got pushed away slightly. Investors saw a bit of positivity in the market. Excuse me. So that's why the equities rebounded, and we can see here, I've looked at Nikkei yesterday, and we saw that the Nikkei was kind of balancing just slightly below these upside lines. However, what I've mentioned yesterday, that still the downside scenario for us was from here, which was never reached, and this was the 21,400 level. And as you can see, the index reversed sharply to the upside, and what I was talking about yesterday was that if it gets back above the 22,402 territory, somewhere around here, then yes, we could start looking at some higher levels again, and we could aim for the high, near the highs of last week, near the 23,150 zone, or even above that. So again, for now, we will aim for that area. We'll see how it performs around here, and then we'll take it from there, because a nice good break above this barrier, above the 23,150 territory, would confirm a forthcoming higher high, and yep, more buyers could be joining in. But again, for now, like I said, let's keep it short and simple. Yes, we are trading back above all these upside lines, which may be seen as a positive sign. However, still be very careful, guys. Everything can change very quickly in these current market conditions. The German DAX, now here the index is well, had moved higher nicely here, back above this area, back above the 200-day EMA, and back above, not only above the 11,770 zone, but also above the 11,845 mark as well. So basically kind of raising this kind of element of positivity in the market, giving a bit of hope here for the buyers. However, the same story, guys, be very careful. Yes, we could see this one drifting higher again, again towards the highest point of March to where around the 12,273 territory, but this, by the way, yep, again, like I said, be very careful for now. We will aim for, probably will aim for this March high initially. We're not going to drag anything higher. We're just going to keep it short and simple for now. Yes, like I said, guys, for now, like I said, we could be aiming for here for the March high, but what we don't want to see here eventually is something like this again, because this might be something. So basically, long story short, last week we had also a good start in the week, in the beginning of the week, and it seemed that the market could continue pushing further north. However, we saw that on Wednesday it started reversing back down, and on Thursday and Friday it kind of sold off heavily, putting the index in the red zone for the week. So that's why we're going to be very careful here with this idea as well, because yes, the fact that it closed back above the 200-day EMA and above the 21-day EMA as well, that's a good sign, of course, a positive sign. So yes, we could see this one drifting a little bit higher here. However, as I said, keep this idea in mind that, like I said, we may repeat the last week's scenario again. So that's why I'd be very careful with that. However, for now, from the very short-term perspective, guys, yes, the index seems to be willing to move a little bit higher, but like I said, initially we'll target the 12,273 territory. The FTSE 100 now here within this index, and it closed below this upside support line taken from the low of the 23rd of March, but it failed to move below this level here, the 5,961 territory. I talked about this one yesterday. So yep, basically the index managed to recover and managed to stay above this level. So we still need to see a nice good drop below this area, below this 5,961 zone, in order to aim for further declines. Again, for now, it seems that it's a little bit tricky, I would say. With the upside, we need to see this one pushing at least back above the 6,231 zone, and only then we could consider some higher levels. For now, we'll probably take a bit of a neutral stand on the FTSE. We did so yep, we did get some data this morning, the employment data here from UK. So basically the figures came out, let's say the unemployment figure came out much better than the forecasted. So it came out as the previous 3.9%. However, the average earnings plus bonus and average earnings excluding bonuses for April kind of declined and failed to kind of, let's say, even reach their forecast. So yep, that's a bit of a worrying sign. Could be for the pound, but again, I'll jump into GBP USD here for now. Like I said, for now here in this picture on the FTSE 100, we are going to remain a little bit on the neutral side, because we're going to wait for a clear breakthrough one of these levels that I've mentioned, either through the 5,961 zone or the 6,231 territory. Now then, gold. Gold is very, very interesting, and this is what I was talking about yesterday. Basically, the commodity drifted lower. It violated this area, this 1708 zone, but as you can see, it got quickly pushed back to the upside, and yep, it managed to remain not only above the 21-day EMA, but also back above this 1723 territory, which is currently getting tested again. So, of course, all this kind of creates this nice, slightly positive atmosphere. However, I'll stick to the same idea which I've mentioned yesterday, that for the upside we will still wait for a push above the 1748 zone, because let's not forget that currently gold is moving sideways within this range, roughly between the 1670 territory on the downside and 1748 on the upside. So that's why be very careful. Now then, Again, with the downside, we'll still stick to the same idea. We need to see a nice good daily close below the 1708 zone in order to at least start considering a bit of a decline here within the range towards the lower bound of the range here. So yep, be very careful with that, guys. Now then, Ethereum. Ethereum here is flirting, and it's well, I mean, it's teasing us here, as you can see, because yesterday it had a nice, good, strong move below this upside support line. But as you can see, this level here, the 217, sorry, area provided good support, and yep, we saw the crypto reversing back up to the back up sharply, and actually ending the day above this upside support line taken from the low the 13th of March. So this such activity provides kind of a good, I would say, positive outlook here for the buyers especially. So so yep, again, yes, we could see this one pushing back up. However, let's take it carefully. Let's be very cautious, because if we do get a nice push above this barrier 252.50, then yes, we will aim for some higher levels, because what we could see here is the crypto pushing back up, testing this area, testing the 252.50 zone, failing to move above it, and then reversing back down. So we've seen something like this happening a few times in several other instruments. So that's why let's wait for a confirmation break, and then let's go into this and see what we can squeeze out of it. But for now, probably the best option would be just to remain a little bit on the cautious side. US dollar against the Russian ruble. Now this is a quick one. Yesterday I talked about this pair, and just wanted to kind of update you on this one. I mean, maybe not all of you look at this instrument in this pair, but still it's quite interesting. It's quite technical, I would say, even. For now, like, you can see that yesterday it drifted higher. It broke this downside line, the same as it did on Friday of last week. Yesterday it did the same thing. It broke above it. However, it may fail to stay above this downside line, and today we're seeing a bit of a correction here again to the downside. So in a way, as long as this downside line remains, I wouldn't say even intact, but as long as the daily candle remains below this, or we don't see a daily close above this downside line, yep, the main scenario could still be to the downside. However, for now, probably the more cautious approach would be after a break, where we could consider the downside scenario would be after a break of this level right here, the 68 territory, and then we could aim for lower levels, because this would confirm a forthcoming lower low, and yep, maybe more sellers could be joining in. This territory around here near the 200-day EMA would be somewhat of a neutral one for us. In terms of the upside, we would need to see a push above the 70.61 territory, roughly around here, and then we could consider slightly higher levels. So yep, that's why, guys, for now be very careful in this one. Quick update on AUD/JPY. I talked about this pair as well, and yesterday I've mentioned that keep an eye on this upside support line, which if fails to break, could help the bulls kind of get back into the action here. And as you can see, we had a nice push higher. This morning we're seeing that the buyers are trying to lift the rate above the 74.47 zone. I talked about this one. That's, by the way, the low of the 9th of June, and yep, in a way, there is a possibility for this one to climb higher again. However, we'll keep an eye on this 74.47 zone, because as you can see, this morning we had already a pop above it. However, the bears are pushing this one back down and trying to keep it below this area. Now, if they somehow manage to do so, and if we see a daily candle staying below this area, now we'll take a bit of a neutral approach, because this maybe not everything is good in the bull block, and maybe we could see this one reversing to the downside. However, we cannot really talk about any downside yet until we see at least a break of this upside support line. Of course, I'm keeping an eye on this 71.92, 93 zone. This is a break of which could be a slightly better kind of option for us after a break, after which we could consider the downside. But we could start looking at lower levels if we get a break of this upside line. But again, for now, the pair is leaning a little bit more to the upside because it's flirting with this 74.47 zone. If we manage to stay above it, then yes, further acceleration to the upside could be possible. Now then, NZD CAD. Now, yesterday in my Trader's Tea Time, I talked about this one, and I was telling you guys to keep a close eye on this 0.88 territory because that's basically the highest point of December 2019. And as you can see, the pair failed to move above that area. This morning, we're seeing a bit of a correction here to the downside. However, as I said, it could be still a correction because as long as it kind of is going to stay below, above this 0.8712 territory here, then we may still consider something like this as a possible scenario. Now let me just adjust this very quickly. So something like this where we could see a nice push higher and yep, maybe eventually a break of this a 0.88 zone. If you're more on the cautious side, you could just wait for a break of this 0.88 territory and then aim for higher levels because this would confirm a forthcoming higher high and yep, more buyers could be joining in. But if this suddenly breaks below the 0.8712 territory somewhere around here, marked by the lows of last week, the low of last week I would say, then we could aim for a bit of a larger correction to the downside towards this upside support line taken from the low the 19th of March. GBP USD, now this is where it's going to be quite interesting. So GBP is pushing higher, so the fact that the unemployment rate came out better than the forecast, much better than the forecast, kind of gave a little boost. However, let's see if the market, but if the GBP USD traders, cable traders, will actually take this positively, continue to take this positively, because as I said, we have the average hourly earnings numbers that have dropped. So let's see if this, like I said, if this move higher can continue today. But to be on the safe side, now we would prefer to probably wait for a push above the 1.2726 zone here, marked by the lowest point of February, and then we could consider higher levels. Now, of course, we do have some other levels around there, like for example this high, the high of last week near the 1.2813. We'll keep an eye on that one as well. This is going to be the level, a break of which could kind of give a little bit more hope for the buyers. However, like I said, we'll start looking at some upside if we get a nice good strong move above the 1.2726 zone. So keep your eyes on that one. And finally, Euro USD. So Euro USD, so we had the German CPI figures coming out this morning as well. So everything kind of came out in line with expectation. So not many surprises. But later on today, we do have the German ZEV economic sentiment number and of course the whole Eurozone ZEV economic sentiment figure. So we'll see how those are going to perform. For now, the German one is expected to have improved. However, of course, we'll see how actually this is gonna be. But from the technical side, this is what I talked about yesterday. What I was saying, that if this barrier here, the 1.1237, continues to provide support, we could see this one pushing to the upside here, higher. Yep, we could then maybe see this one pushing further north. However, looking at this picture right now, some might say even that we could be forming here a possible little head and shoulders pattern. If so, then, well, I mean, this could be a sign of reversal where we could see this one drifting to the downside. However, for us to confirm that, we would need to see a nice violation of this so-called neckline here near the 1.1237. But again, until that happens, we cannot really talk about any let's say larger correction to the downside. In general, for now, looking at this picture, we cannot really talk about the downside. However, for those who are more on the cautious side, you could wait for a push above this barrier here, the 1.1384, and then maybe if we do get a nice daily close above this, then yes, we will aim for some slightly higher levels like the 1.1458 or even the 1.1496, which is marked by the highest point of March this year. So, but again, that all this upside could come if we get a nice daily close at least above the 1.1384 zone. So keep your eyes on that one. And like I said, if this by any chance starts reversing back down sharply here, well, I mean, like I said, keep your eyes on this 1.1237. And to be honest, if this gets broken, then, well, like I said, maybe we could even see this nice head and shoulders pattern kind of getting completed. So I really hope you found it useful, guys, and thank you very much for watching and listening. If you want to join me later on at my traders tea time, as always, the 13:15 GMT time. Also, to keep your eyes on today's data. We do have some retail sales coming out from the US, so yep, it will be quite interesting to see how they have performed. For now, the expectation is for, on the, let's say, brighter side, and the expectation is for a nice up move, and a nice kind of let's say increase. But again, let's see how that's going to come out. Let's wait for the release, and don't try to predict it. So, yep, have a wonderful trading day, guys. Like I said, thank you very, very much for watching and listening. I hope you enjoyed it, and I'll see you later today in my traders tea time, 13:15 GMT. For now, have a wonderful trading day, and bye-bye.